Nutanix is a transformation story for us. It's one that we've historically been excited about in terms of that transformation that's taking place. And we're going to have the team there come and speak about some of the stuff that they are doing and explain the story. So happy to have Richard from Nutanix come join the event. How you doing, Richard?
Good. How are you? Thanks for having me.
No, thank you for joining. So you're at Nutanix now, but you spent 23 years as an equity analyst at Needham. So I think this puts you in a pretty constructive place to tell the story. This is much more of an analyst story as opposed to even a product and user story, as I believe again, net promoter scores for your product are outstanding. The people that use your product love it. JetBlue, Home Depot, and some others, according to the site. So welcome and thanks for coming on again. So a little bit about the Nutanix story, if you could just tell us, walk us through the company, where you guys are today, the transformation. I know it's been a couple, the product first, then the economic model. And in many cases, this is hard for most analysts and people to understand. So just walk us through the company and where you are today.
Yeah, no, I appreciate the setup, Sean. So yeah, I mean, Nutanix has undergone a number of transformations or transitions over its life cycle as both a private and public company. We came public in 2016, via IPO. So we've really transitioned, I'd say, around three major vectors. One is business model, two is the product portfolio, and three is our go-to-market. So just quickly to hit on those 3 points. On the business model side, we went from initially selling an appliance, which was bundled software and hardware, to fairly quickly getting the hardware out of our model and becoming really hardware independent and moving to essentially perpetual software model, which we called life of device. And then a couple of years later, we transitioned to a subscription model, realizing that having a subscription model and having that renewal part of the business was just going to be a much better business model. So we're well down that subscription transition now. Over 90% of our business is in fact subscription, and we're starting to see the benefit of renewals, which come at a much lower cost than new business, and add predictability and actually a growth lever to the model. So we're just starting to beginning to see the benefits of that in the form of re-accelerating top line and improving leverage in the bottom line, but we think there's a lot more to go there. Then to move to the other vectors, product portfolio, we started out really pioneering the hyper-converged infrastructure category, our HCI product called AOS. And then over time, it was kind of an innovation-driven company, founder-led company. We expanded our portfolio to over 15 products. And the problem was there was a lot of probably too much independence in these products, both in R&D and in go-to-market, and really not the efficiency or probably the benefit from a solution perspective that we think our customers needed. So we've undergone a transition to really more of a solution-based portfolio where we're converging a lot of these products into 5 core solutions, simplifying them from both the pricing, packaging, and delivery to the end customer, making them easier for us to sell them, for our partners to help us sell them, and for customers to consume them. So that's kind of the solutions part of it, which we're in the middle of right now. And the other part I'd say was in go-to-market, as a kind of pioneering sort of innovative company, the initial go-to-market model was very much kind of go it alone. There wasn't a lot of partnerships. And I think we've pivoted hard towards embracing partners, particularly strategic partners. And we can talk a little bit more about this later, but such as Red Hat and Citrix and HPE, and really forming these mutually beneficial relationships where we can both get incremental sort of go-to-market leverage from each other due to the complementary sort of nature of our products. So those are kind of the transitions we've gone through, and that's kind of what brings us to where we are today with a software model that's 90% plus subscription, is seeing nicely accelerating top line, and is seeing a pretty sharply improving bottom line as well.
Got it. No, that makes a lot of sense. So again, transition, which again creates a kind of a foggy story and maybe a dislocation in what's going on in the day-to-day of public equity markets per se. Now,
fair enough.
talk to us about the product offering, as if you would to a third grader. What is the product? Why do they use it?
Sure. I'm not sure if I'll pass the third grader test, but I'll do my best. So essentially, our product makes it easier and less expensive to run your apps in a cloud, whether that's a private cloud, sort of on-prem, or a public cloud, AWS, Azure, et cetera. So that's the core premise of what we do. And to take a step, sort of drill down a little bit into that, we pioneered this category of infrastructure called Hyper-Converged Infrastructure, or HCI. And essentially what that it converged the three main elements of a data center, that being compute, storage, and networking, combined them with a software-defined layer, made it really easy to deploy and scale and manage them. Whereas historically, they were kind of three silos that had to be managed and scaled independently. We really converged them with this software layer, software stack, if you will, made it much easier to scale and manage them, really saving our customers a lot of time and making the data center much more kind of with the scalability and economics of a public cloud data center. And sort of the second sort of generation of our platform really looks to do something similar in terms of breaking down silos, but really amongst clouds. So we want to make it sort of one-click simple to move your workloads from your on-prem private cloud to any public cloud, whether that be Azure or AWS. So really kind of making this hybrid multi-cloud platform very simple to manage and making it very easy to move workloads across these different clouds. That's kind of the current vision and thrust of the company.
That makes sense. Obviously, again, I think the concept that has always revolved around simplicity and creating a much simpler solution in some cases is somewhat chaotic, and bringing that again into one, or as easy as you can make it into one control plane, if you will. Now let's talk about leadership. Rajiv, what he brings to the table. He came from VMware, and what he brings to the table to lead Nutanix.
Yeah, great question. Right. So we have, I'm not going to say quite new CEO, Rajiv Ramaswamy's been on board for just over a year. And just maybe I'll take a step back first and say our founder and former CEO, Dheeraj Pandey, he was basically a pioneer and an innovator. He really created this HCI category, and it takes a certain kind of visionary to do that. So credit to him. He founded the company, created a category, did a lot of innovation over the first many years of the company's life. And as I said, maybe in some ways too much innovation or spread too broadly, trying to maybe do too many things. And so for the next phase of the company's life, I think what the company really needed was an operator, someone who had profitably scaled a software business and maybe done that multiple times, and preferably with good domain knowledge. And that's sort of exactly what Rajiv brought to the table. He had run multiple large businesses, including VMware, our largest competitor's North American business, which is actually quite a bit larger than our business. He had scaled that profitably. He had scaled large businesses at Cisco and other companies before. So he had really the perfect skill set, we think, sort of the operationally focused skill set to profitably scale a business. And that's what he's really brought to the table, helped us to sort of focus on fewer, bigger bets, sort of streamline our product portfolio, really finish that transition to a subscription model, and kind of build in an operational repeatability into our go-to-market motion and our sales processes. And you've seen that in just a much higher level of consistency in terms of how we've been delivering to the street. I think you could certainly argue we've had 5 beat and raise quarters, and some of them predate Rajiv, but essentially over his tenure, we've been very consistent in hitting the targets that we put out there to the street. And that's one of the things I think he brought to the company.
Yeah, I think the last several quarters, you've really seen that inflection in the business, the product offering, the financials, and obviously you had Investor Day recently where you laid out kind of the roadmap into the future. Now, going back to the product, why do people love the product? I know there's different things, right? Net promoter scores, all these things are incredibly high. you go to Gartner, you go to Forrester, you're in the top right quadrant, meaning vision plus product kind of is the best way maybe to summarize what that is. Your customers love the product. Why do you think they tend to engage and just embrace it?
Yeah, so I think that's a great question. I think the biggest thing about our product is, one, it just works, and it works really simply. So it makes the lives of our customers a lot easier and enables them to make their data centers much more efficient and require fewer man hours and man minutes to actually to manage them. So that's kind of at a very high level, and I think that leads and that kind of drives that very high NPS score. I mean, we have almost a freakishly high NPS score for an infrastructure software company. It's been consistently over 90, whereas this type of company, I'd say, is normally probably closer to half that. So customers do love our product. It's the ease of use, the simplicity. It's also the choice we give them. One thing we've always done from the very beginning was to try to give our customers choice. We gave them we think, the best sort of core HCI stack, but then we let them choose their own hardware, their own hypervisor, their own public cloud if they want to move the workloads to the public cloud, whether that be Azure or AWS. And now as we move sort of into modern applications, their own sort of Kubernetes distribution and runtime, whether that be our own that we have built in, or for instance, Red Hat's OpenShift, which we recently partnered with. So really give them a lot of choice. And so we've been able to grow our customer base pretty substantially, needless to say, over the last several years. We're now at about 20,000 customers and growing, and we see that as still lots of opportunity to add more customers there.
Awesome. Two things outside of Nutanix in general. So one is you just released the Enterprise Cloud Index report. I think you guys do this annually in partnership with potentially other organizations. But the Enterprise Cloud Index report, what are you doing there? What was the general takeaways? I think for us, again, we read it, and it's incredibly compelling for your space. And what is the report at a high level, and then the general takeaways?
Yeah, so thanks for the question. So you're talking about the Nutanix Enterprise Cloud Index report, right? So this is something we do annually. It's a survey of CIOs trying to just understand what their challenges are, how they view the challenges, and what they're thinking are the solutions to those challenges as you look out in time. So I would say that the number one takeaway is around the operating model that they think is going to be the preferred operating model going forward. I think 83% of our respondents said they see hybrid multi-cloud as likely to be the preferred operating model for them and others over time. And what that means is basically that you would have probably some workloads on-prem, some workloads on likely multiple public clouds. So it's really having the ability to manage workloads across a variety of different clouds and do that efficiently and simply and sort of with minimal overhead. So that's kind of the number one takeaway. In sort of double clicking a level into that, we asked them, like, what do you see as the key sort of challenges? And they talked about simpler management across, mixed cloud infrastructures, not surprisingly, common dashboards across, different cloud infrastructures, and then just help with managing things like security, data integration, and cost. Now, suffice to say, we think our platform helps you on all these fronts. We are a hybrid multi-cloud platform. We do make it simple to manage across multiple clouds. We do have security built into the platform. We help manage, your data across clouds with our files and objects products, as well as our database management products. So we think the trends that we've identified here that have frankly been a continuation of trends we've seen in this report and in other, industry reports over the last several years, play to the strengths of our platform.
Yeah, and that takes me to the next kind of like conversation is Amazon AWS. They've had a series of outages over the last several months. Again, not talking about the outages themselves, but just simply put, how do organizations think about their biggest cloud vendor essentially going down, whether it's for 1 minute or 1 hour, and how that potentially increases demand for solutions that are thinking around
Sure.
hybrid multi-cloud like Nutanix.
Yeah, no, I mean, it's a great question, and I think it does exactly that, in that it reinforces this idea that you don't want to be reliant on any one cloud or any one public cloud provider, right? I think that speaks to the whole hybrid multi-cloud strategy, which you have it builds, you have some sort of built-in safety there, or disaster recovery capability, when you have your workloads distributed across multiple private and public clouds. And I think when you have an outage like AWS had recently, it kind of reinforces this idea that you don't effectively want to have all of your data center or app runtime eggs in one basket. So again, that's sort of what we do, is we enable you to simply and easily and efficiently manage workloads, on-prem, off-prem, back and forth, and across multiple public clouds. So I think Amazon is a good partner of ours. Our product works well with them. We have a partnership to make our platform work with their platform. But at the same time, I think when they have an outage, it kind of reinforces this idea that you don't want to necessarily be tied to just one public cloud vendor.
Got it. Yeah, no, that makes a lot of sense. The last couple questions. So how should we think about Nutanix kind of over the next 2 to 5 years in terms of product and in theory, like financials? You've laid out some of this stuff recently. So
Yeah.
Just reiterating maybe some of it and yeah.
Sure, absolutely. I mean, I think from a product standpoint, I think we would look to further leverage, the leadership position we have in the HCI market to become the leader or a leader in the hybrid multi-cloud market. I mean, our platform, we think we already have all the big pieces in place. We just want to keep driving innovation in that platform and just making it easier to move workloads across clouds. Supporting more public clouds on our platform. So we just see sort of doing more of what we've done and becoming, a leader in hybrid multi-cloud, just as we are in HCI. And then from a financial perspective, I think we're going to really start seeing the benefits of a maturing and a subscription model gaining momentum, right? We're going to generate, I think, a lot more leverage from the building renewals pipeline I talked about, right? So we kind of laid out on our investor day that over the next couple of years, you're really going to start seeing bigger and bigger tranches of renewals come up, or business come up for renewal. And that's going to drive not only sort of visibility in the top line, growth in the top line, but also a lot of efficiency in the model, because it costs about 80% less to secure a renewal dollar than it does to secure, a dollar of new business. So lots of leverage, I think steady growth from this maturing sort of subscription flywheel, if you will. So yeah, that's how kind of we think about the next couple of years.
Yeah, that makes sense to us. I'll leave this last question here as kind of an ex-analyst, 23 years. If you're putting your analyst hat on, and again, your personal opinion, and it's not a recommendation from them, but if you're putting your analyst hat here, what do you think? What do you think most investors potentially miss in terms of the story at Nutanix?
Yeah. So one is, I think that you noted there's been a lot of transitions and it's been kind of messy. I think maybe folks that haven't taken a look in a while don't fully appreciate that we're 90% subscription. So the transition is largely done. So one, we're a subscription software company. Two, we put out a forecast at our investor day for 25% CAGR top line growth of our ACV billings, and this is kind of the key metric for us while we're still seeing a little bit of term compression. But so effectively, we're saying we think we can grow 25% plus top line over the next several years. We've begun to show that already on our ACV billings. Our revenue is slowly catching up to that, and it'll take a little while because we're still seeing a little term compression, but we did 20% year-over-year growth of revenue in our last quarter, and that we think will gradually accelerate as the term compression we're seeing kind of ebbs. So I'd say, we're basically trending towards a 25% top line grower. And then finally, the piece that I think takes a little work to sort of drill into is how much both top line growth and bottom line leverage, particularly sales and marketing expense leverage, will be driven by renewals. As I said, renewals are tremendously more efficient to transact than new and upsell business, 80% less. And so when you see that mix of renewals that we laid out pretty well in our investor day deck, see that growing substantially as a percentage of our business, you're going to naturally see our sales and marketing percentage come down pretty dramatically over the next several years. And that's going to drive just much higher profitability. I think when you put all that together with where we're trading today in terms of EV to sales, for instance, there seems to be a bit of a disconnect in the sense that folks don't either fully appreciate it or maybe fully believe it, given that there has been a number of transitions there. So, our job is to keep going out there and just executing quarter after quarter, and we think eventually investors will get that part of the story.
Got it. Yeah, no, when it becomes obvious, I think it's obvious. And anyways, I appreciate you coming on and sharing some of the details and joining us today at our event, and hope to have you or speak with you soon in the future.
My pleasure, Sean. Thanks for having me.
Awesome, Richard. Yeah, so that was Nutanix. It was obviously a great conversation. Everything that he discussed, again, we believe is happening. This is a multi-year transition that we think we're at that inflection point, as I said, where you do see kind of top line and bottom line both head in similar directions. We'll see that over time. And again, as investors, we are patient, but also long-term oriented, and also seeing some of the traction that is actually taking place. So there's traction there.